What's up, everybody? I hope you're doing well. So a while back, I invited you all to share via Instagram what your burning questions were related to taxes and accounting in private practice. And one category that came up frequently was all about write-offs. What are write-offs? How do you even keep track of write-offs? What are the benefits of keeping track of those write-offs? And how to deal with things like, how do I account for the fact that I'm doing teletherapy from my home, and so some of my home is a write-off, but not all of it? Well, I'm so glad you submitted these questions. I didn't even know the answers to a lot of them, and so I had the wonderful privilege of sitting down with tax expert Andrew Riesen, who is the CEO and co-founder of Herd Bookkeeping and Tax, which is a software and accounting service specifically designed for therapists. So Andrew is a legit expert, and he answered all of your questions related to write-offs. And if you've been following along, this is actually the second video in a series of videos of this interview with Andrew. In today's video, I'm going to share with you all the things that he talked about related to write-offs, and there will be more videos in this series to come. We'll get into that a little bit later, but for now, let's dive into that interview with Andrew where he answers all of your questions about tax write-offs. We're going to keep plugging away because we got some good questions and I want to hit on them. So the next category of question, which actually we got a lot of questions about this, is all about write-offs. And maybe even before we get into some of the questions, can you just explain what write-offs are? Like, what does that term mean when people use it?
Yeah, a write-off is a term or a jargon that accountants use to describe a deduction or expense that is associated with your practice that you can, or that will be reducing your taxable income that you'll be presenting on your tax return at the end of the year. So an example of a write-off could be your liability insurance through CPH or the trust. It could be the fees that you're paying for Simple Practice software subscription. It could be credit card processing fees for using the payment processor through Stripe with Simple Practice. So these are all of the expenses that you're paying for, the operating expenses that you're paying for to maintain and operate your private practice.
And write-offs are fun to learn about, even though it's tax. So you named it, you can kind of write it off. What is the benefit of knowing what the write-offs are? Like, why not just skip it?
One of the main benefits of knowing what a write-off is in your private practice is you're going to get to the end of your first year in private practice, speaking specifically to this person that's having this experience for the first time, and you're going to realize that you have made a lot of money, and perhaps you haven't paid in a lot of money into taxes throughout the year. And it'll turn out that this taxable income that you do have might be quite a bit. And so your goal is to always find all of the expenses that you've paid for in your practice that might reduce that taxable liability for you as a sole proprietor, or maybe as an S corporation, whatever your business entity might be, to reduce the amount that you owe in taxes. And so that's why it's highly important throughout the year to keep track of all of these expenses. It's an opportunity to reduce your overall tax liability that you're responsible for paying.
Wonderful. So everyone's wondering about write-offs for this reason. Say, I don't want to pay any more taxes than I am supposed to. So let's hop into the question. This is a great question. So how can we calculate internet, home office, electricity bills as write-offs? And do you have any tips for that question?
Yes, this is a great question and a very common question. So for the indirect expenses specifically, and I will bucket the home office deduction, internet, phone, for these expenses that you are using that you might not be thinking are typically associated with your practice, you will calculate these on what is considered to be a pro rata or an allocated basis. And that is a fancy way of describing you calculate it based on how much you're actually using it. And so in the case of internet and phone services specifically, let's assume that Dr. Fang is using her phone 50% of the time to work directly with her clients and directly in her practice. That would mean that she would look back at what the total phone bill is for the year and take 50% of that expense and use 50% of that as a deduction or a write-off. More realistically, that might be closer to 25% or 30% if it is an individual phone bill. But that is if you are a sole proprietor, you can write that off directly on your individual income tax return on your Schedule C. If you're an S Corp, that happens a little bit differently. You would provide a reimbursement to yourself through the business for the percentage that you're actually going about paying. And then specifically as it relates to the home office deduction, this one is a little bit more nuanced and complex. For the home office deduction, there are two approaches in the eyes of the IRS. There is the standard deduction and then also the simplified deduction that you can take. The simplified approach that you can take is taking $5 up to 300 square foot in your home office. And basically you calculate the size of your home office. And I know you're thinking like, oh, well, I live in a studio or I live in a 2-bedroom apartment. How do I go about calculating that square footage or that percentage that I would allocate to my home office? And it is confusing, but the recommendation would be getting a clear sense or understanding of what that square footage is. And then if you're using the simplified approach, you multiply that by $5 to calculate what the total write-off for the year is going to be. In the standard approach, you're taking into account things like the mortgage cost if you own the home, the mortgage cost, the mortgage interest, utilities, so things like electricity, gas, and water. And then you're taking a percentage based on that square footage and the total dollar value or total dollar amount rather paid to account for what that sort of write-off is going to be for yourself for the end of the year. And again, for a Schedule C filer or a sole proprietor, you would take this write-off on your individual income tax return. And if you're an S corporation, rather, you would be taking this as a reimbursement that you're paying yourself back out from the business.
Wow. There's
a lot
so
of
many
information.
There's so many layers to that, right? There's probably so many folks thinking, oh, I didn't realize I could write any of that off. And then this, like, how do you know what like, okay, I got my phone, I use it for me and I use it for my clients, maybe so how do I keep track of what percentage that is? Or like, is there a form or do I write it down somewhere? Or is it just kind of, I'm guesstimating, I think it's 25%. How do people keep track of that?
A recommendation here is I would not describe anything ever as a guesstimate per se, but specifically as
write that word on your tax form.
Yeah, exactly. Don't use that word on the tax form specifically. But specifically as it relates to internet and phone, this is an estimate, a reasonable estimate that you're making, a determination that you're making. And so, let's imagine, you have internet for your household and it's just yourself. 8 hours a day, you're using it for yourself personally, and then maybe the other 8 hours, or for yourself as a business owner, and maybe the other 8 hours you're using it to, watch Emily in Paris and browse the latest lifestyle blogs or whatever you might be doing. It's just, you have to make a reasonable determination or a reasonable estimate and really think about a good way to approach it is really thinking about what your day looks like when you are using your phone or using your internet. And if you do feel uncomfortable making that estimation on your own, somebody like Herd could help you walk through that, or maybe talking to your local tax accountant or professional that you might be working with.
Well, that's really helpful to know. I think probably most folks end up doing like, not at all. I didn't even know I could write it off, or it's too scary, I'm not going to do it. Or the other extreme of like, this whole apartment is a tax write-off 100%, like, and just inflate things. So finding that reasonable estimate, which it is complicated. So I love that you're available to kind of help, that Herd is available to help kind of hone that in a bit. More questions about write-offs. Mm-hmm. Can we write off business expenses made using our personal accounts? So if somebody maybe doesn't have their business account yet, and now they kind of did their oopsies and now they got it, can they go back and write off those expenses that they already made on that personal account?
So two different lenses through which I will approach answering the question as to, if I make an expense out of my personal account, can I write that off? And so if you are just starting in private practice, you're inevitably going to have a lot of expenses that you're paying before you move into private practice. And that likely means before you actually set up your business, you're probably going to get your malpractice insurance. You're probably going to be, filing for incorporation. You'll have fees, registration fees that you're paying to the state. You're going to have other sort of business expenses that you're paying for, whether it's furnishing a beautiful office like Dr. Marie Fang's in the background, or, setting up your space so you can actually operate and support professionals. And so all of these startup costs you're able to write off. And a recommendation here, because at the point that you probably don't have a business bank account, you probably haven't set up any sort of accounting software, or probably haven't, set up something like QuickBooks or Waves, or using a service like Herd. I would just recommend keeping a spreadsheet of all of those transactions before you've started in private practice, and just keeping all of those in place. And then you can always add those back to any accounting software that you might use. You can provide those to any accountant that you might be working with, and they'll be able to, appropriately help you understand, hey, we can take advantage of these specific startup costs, or, hey, maybe this is something that we might not be able to associate with the given tax year or with your business. As it relates to a formalized business entity, I do want to just add a disclaimer here that I do think it's incredibly important to pay through your business account, but that oopsies do sometimes happen as it relates to personal or business expenses coming out of your personal account. Maybe you're at Target and you need office expenses and you have to pay on your personal credit card because you forgot your business debit card or your business credit card. And so, yes, it is okay if it happens, but if you do have a formalized business entity, it's important that you're protecting what they call the corporate veil, which is the separation between your personal accounts and your business accounts. Because when there is that crossover between personal and business, and again, only important if you have a separate business entity, technically your personal assets are being combined with your business assets. So in the case of some form of litigation, God forbid that would take place, you would not want to have a crossover of business and personal expenses. But of course, this is something within reason. So this is not to instill the fear of God as it relates to managing your expenses between personal and business.
If I'm hearing correctly, you're saying the rules are a little bit different if you're a sole proprietor,
Yes.
which is like default entity,
Yeah.
or if you're some type of incorporated business. And if you're a sole proprietor, it's kind of like, even if you never have a separate business account, as long as you keep track, then you're good to go, and you can give that to your accountant for tax season. And if you are incorporated, you have a S corp or something like that, then you absolutely want to do everything in your reasonable power to keep those expenses separate in the business account. And if you do have the oopsies moment, you're not like screwed over forever, but you want to, there's some kind of extra rules of how to be mindful around that.
Yes, absolutely.
I wondered if you could say a little bit about Herd and what you do and what you offer for therapists.
We support specifically mental health professionals, so independent clinicians with their practices, get a handle on their finances, help them get organized, and really help stay abreast of the changing tax laws that are constantly in flux, to help make them more successful business owners and focus on the thing that matters most, which is serving the clients. So
wonderful. And I've linked to Herd's website below as well, if anyone wants to learn more. Thank you, Andrew, for explaining all of that for us, as I'm sure I'm not the only one who learned something new from your interview today. If you're a therapist looking for support with your bookkeeping and your accounting and your taxes, then check out Herd Bookkeeping and Tax, where they not only offer software that keeps track of all of your kind of bookkeeping and accounting type stuff for you, but you're also connected with a real human who is an accountant who can help hold your hand, answer all those questions that are specific to your unique situation, so you don't have to worry about it. And before we close, I'd like to thank TherapyNotes.com for sponsoring this video. TherapyNotes helps with all of your practice management needs, from scheduling to notes to billing. They have a HIPAA-secure telehealth platform, which is free for all of its users. And if you'd like to check out TherapyNotes, you can get 2 months to try it for free with no commitment, just by clicking the link in the description of this video. Well, thank you again, Andrew, for offering your time and your expertise. This was so helpful, I know, and I can't wait for the rest of the videos in this series to come out, answering all of your burning questions related to accounting and taxes in private practice. And until next time, from one therapist to another, I wish you well.